Welcome to Global One Media Stocks to Watch. I'm Michael Suido. I'm speaking today with Mark Jarvis. He's the chairman and CEO of Giga Metals. They're a company that focuses on nickel exploration and development, and more specifically, nickel to help power electric vehicles. Mark, welcome to the program.
Well, it's very nice to see you, Michael.
I want to start today by talking about the market for nickel. I mean, it's used in a whole bunch of things: stainless steel, rocket engines, electric batteries. And presumably, as more and more people adopt electric vehicles, the demand for nickel should soar. One thing I find interesting is that nickel increases the energy density for batteries, which means that in turn, people can drive longer distances with them. But, if we look at nickel prices, I mean, they have dropped substantially over the past couple years. It was about 48,000 US dollars per ton in early 2022. Today, it's about $16,000. That's a 67% drop. Tell us, what's going on?
Well, what has happened in the last 6 months or so is the Chinese have built overcapacity in Indonesia. Indonesia has emerged as the largest producer of nickel in the world, and it's largely with Chinese investment. And my view is that we're in a structural bull market in nickel, but this is a meaningful dip that we're in right now. And when I say a structural bull market, it's because the rise of electric vehicles takes nickel from, well, about 5 years ago, nickel was about, or batteries were about 3% of the nickel demand. That's now up to around 16% of total nickel demand. The big use is stainless steel, which is still around 65% of nickel demand. But because the electric vehicle story is growing so quickly, and it's a bit of a slowdown right now, actually, but it's a slowdown in growth, not, it's not declining. It's actually, the growth rate's a bit smaller than it is over the last year, largely because of difficult economic conditions in China. So, I view, all of this, the, over-construction by the Chinese of nickel production out of Indonesia, and the slowdown in China. These are things that will pass. So the question is, there's no doubt that we are right now in oversupply. The question is, how long does that last before the incredible rise of nickel demand caused by batteries chews through the oversupply and just keeps going? So, and that's a good question. I don't have full visibility on that yet. I'm waiting to see what happens over the next couple of months before we'll have a better idea. Is it 6 months? Is it 12 months? Is it 18 months? I don't really know the answer to that yet.
But if we drill right down to it, you're not concerned about oversupply over the medium to long term?
No, I mean, if you gave us all the money we need today, we're about 5 years away from first production. And so really our concern is, what will the nickel price be 5 years out, 10 years out, 20 years out? And, we've got a very, financially deep partner in Mitsubishi Corp, and they're thinking about the nickel price over the next few decades. And the companies that we're talking to, we're seeking strategic partners to help us build this thing. This is a $2 billion US build to actually make a mine here. It's a very, very large mine we're talking about. And, we're talking to large mining companies, and we're also talking to OEMs, car makers, that want to secure a long-term supply for nickel, for decades, to give them a competitive edge. And they're not, really looking at the short-term nickel price. They're looking at, can I get nickel 10 years from now? And
I think you highlight something really interesting there, which is we're not looking at the short term. The prices right now may not be so relevant to when you're coming online, and certainly not to when your partners are looking at. And so with that, let's talk more about your project and your company, Giga Metals. You're focused on a project in the northwest of Canada, in north central British Columbia. It's called the Turnagain project. And as you mentioned, you partnered up with Mitsubishi on this. I presume they're probably a pretty good partner to have, particularly when it comes to sales. So tell us, how did this come to be, and what exactly is their role?
Well, that's a very good question. So just to be clear, we're not dealing with Mitsubishi, the car company. That is another division of the same company. Mitsubishi is an extremely large company. We're dealing with the division of Mitsubishi, which is the largest commodities trader in Japan. And within that division, they've got a raw materials division. And that division, their modus operandi, part of it, is that they like to get involved as a minority interest holder in developing mines. And they've done this successfully many times with many different partners. So they will get involved at the stage that we're at, where you're doing engineering, you're trying to figure out what the mine looks like, and you're trying to put together the money to actually get the mine built. And typically, they like to end up with 20 to 25% working interest, so that they can get access to 20 to 25% of the output of the mine. And ultimately, they would like to get offtake rights to more than that, but that's sort of like a bonus. So that's their model. They do not want to operate the mine, but they are extremely good partners, and they're very, very helpful, both about supplying development money, but also in introducing us to very large corporations at a very high level in terms of they would like to get more partners involved in this project.
That's excellent. And I mean, the way you describe it, I can see companies trying to lay their claims to ensure, like you said, they have sufficient resources, in this case, sufficient nickel for their projects for the long term. I understand that you recently conducted a pre-feasibility study on this Turnagain project. Give us a top-line view. What did you learn?
Well, we learned with much more detail that the model that we had put together, to describe what the mine would look like, was a sound model, but we just simply described it in much more detail, and we made it much more predictable. So some of the top line things are that, in terms of technical risk, this may be the lowest risk, undeveloped, large nickel project in the world. The processing is so simple, and not to get into the weeds too much, but we're recovering one mineral. It's called pentlandite. It's a sulfide of nickel and cobalt, and they both come with that 99% of the nickel and cobalt in this deposit are contained in pentlandite. So the fact that you only recover one metal or one mineral by froth flotation simplifies everything. And so we've got a short, simple processing circuit. The less steps you have, the less risk there is. It's as simple as that. And a major development was in what's called geometallurgy, where you're trying to predict with each different part of this ore body. And we're talking about, we've got reserves now of 950 million tons. And each different part of that huge ore body, you want to be able to predict how much nickel you're going to recover from that area. And we made remarkable strides in this in terms of our ability to predict recovery with very, very narrow error bars. And that is, in my mind, an extremely significant development.
I heard you say this is one of the lowest risk projects really anywhere, and that is a pretty bold claim to make. So, just want to highlight that, and we'll come back to you in a couple of years, and we'll see if we can hold you to that.
Okay.
So I was looking at your website and the background materials on Giga Metals, and one of the things that struck me was how you're placing the environment at the forefront of your business. And that's not necessarily an easy thing to do for a mining company. In fact, you're committed to making the Turnagain project a carbon neutral mine. Help us understand, how are you going to do this?
Well, okay, there's a couple of questions there. So how do we make it carbon neutral? We are already, in our modeling, in our PFS, our carbon intensity is below 2 to 1. In other words, we generate less than 2 tons of CO2 per ton of carbon or per ton of nickel produced. And that's largely because, and that's amongst the lowest in the world already, okay? But we also are doing a lot of research into our tailings management. So once you grind the rock up and you extract the valuable minerals, you've got leftovers, tailings, and you hold that in a tailings management facility. The nature of the rocks of our tailings, they're silicate tailings. They will absorb CO2 directly from the atmosphere, and they will convert to carbonate minerals. So the CO2 gets locked away in mineral form. It's a process known as carbon sequestration. And this is distinct from carbon capture and storage, where you can capture CO2 and you can store it, say, underground, but there's always the risk that it could escape. This is not capture and storage. This is sequestration, where it actually converts a mineral from a silicate form to a carbonate mineral containing the CO2, and that will last for hundreds of millions of years. So we've been working with Dr. Greg Diffel at the University of British Columbia, who's been studying this for 20 years in both nickel and diamond deposits. Diamond deposits also have silicate host rocks. And he's developed a methodology to measure how much CO2 is being sequestered in your tailings. And we're working with him. We'd like to see this methodology certified by governments so that we could then claim the carbon credits. And it's through that route that, we think we can get to carbon neutral, scope 1 and 2, to make concentrate at the mine gate.
That's impressive. It's really interesting to hear. In terms of that carbon sequestration, is this still experimental, or how feasible is it?
Well, carbon sequestration, this exact process I'm talking about is happening all around you all the time. It's a fact that this happens. Silicate rocks exposed to the atmosphere slowly convert to carbonate rocks. But now if you take those rocks and you grind them up fine, as we will be doing in order to extract the nickel and the cobalt, the rate of sequestration goes way up because you've got far more surface area exposed. And so it's not, I mean, it's a fact that this happens. And you can
But to be able
measure,
to have a company that's doing that, that's not so common.
no, it's not. And this is at the early stages. And I must say that, this is something that is common to all of the large, low-grade sulfide nickel deposits. One of the projects that Dr. Diffel studied is Mount Keith in Australia. And, he discovered they didn't know that they were sequestering CO2. And he discovered how much CO2 they were sequestering in their tailings. That was pretty good news for them. So, and this is important because, like, the nickel coming out of Indonesia is extremely high carbon intensity, ranging from sort of 30 to 1 carbon intensity up to 80 to 1. In other words, 80 tons of CO2 emitted for each ton of nickel produced. And it's not only that, but the mining methods in Indonesia, they're strip mines mostly, which is they're very thin surface mines, maybe 10 meters thick. And in order to get the nickel out of the dirt and clay that it's hosted in these laterite deposits, in many cases they're mowing down mile after mile of tropical rainforest to get at the nickel. They're processing it very aggressively. And in many cases, in fact, in most cases, the tailings are being dumped in the ocean. So there's a lot of environmental issues with with the way that nickel is being mined in Indonesia. And if you look at the car companies, we're talking to a number of car companies, and particularly when you look at the premium brands in places like Europe, they have to pay attention to their supply chain, and they have to pay attention to the carbon intensity of their supply chain. And, some of them don't want anything to do with nickel that's coming out of Indonesia, because this what's happening in Indonesia environmentally is becoming more and more visible to the world. And if you're a premium car maker, you don't want your buyers to suddenly go, well, wait a minute, this is dirty nickel, and we're going to boycott you. That's their nightmare. Okay, and so they're very careful about sourcing, and that's why there's so much interest in our project, because we're in Canada, for one thing, which is a rule of law jurisdiction. We've got environmental constraints upon us. We have to go through a very detailed environmental assessment in order to get permits to build a mine in Canada. And, so that's both a risk and a reward, in the sense that, we don't see any showstoppers with our development of this project environmentally. And we see, very positive things about it. And if you can get a mine built in Canada as a buyer of the product, you can be confident that your product is being delivered under the various highest of environmental standards. So that's the positive side of it.
You've contrasted what your company is doing with the companies in Indonesia. You've mentioned supply chain, you've mentioned environment. On that supply chain note, one thing which I think might be interesting and I want to ask you about is the Inflation Reduction Act that was passed by the Biden administration. I think it was in August of 2022. The whole idea is essentially to secure and safeguard resources for the United States and not be dependent on the Chinese. And Canada and the US, of course, are neighbors. They have a free trade agreement. Your mine, you say you think the nickel will come online in about 5 years. Do you expect to get a boost from that Inflation Reduction Act?
Absolutely. I mean, we are on the list. We are a free trade partner with the United States. The United States is very interested in developing secure supply chains in North America. And as it happens, if you want nickel, Canada is the place in North America to find nickel. And so the Canadian government is also very interested in developing a whole supply chain for batteries. So it's not just mines, although without mines, none of the rest of the supply chain works. But you need to build mines, and we need more refineries in North America. And then from refineries, we need to be able to take it to PCAM and CAM. CAM is cathode active materials. And that's ultimately what you sell to the battery companies is cathode active materials. So that whole supply chain is under development. And there is not only tax advantages for the car companies if they're getting their raw materials from approved sources, but there's quite a lot of government money available to help develop these critical minerals, and we are actively pursuing that government money.
Very good. Well, speaking of money, I want to bring the conversation to investing now. If we look at your company's share price, it's tumbled 50% over the past year. It's down about 80% over the past 3 years. But we're now at the start of 2024. So I want to ask you, what has changed and why might now be a good time to invest in Giga Metals?
Well, I guess the fundamental thesis of investing is buy cheap and sell dear. And so that starts with buying cheap. And as I said, the price of nickel is down by about 50% in the last 6 months. And that has hurt us. It's hurt, all of the nickel developers. So, if you believe the thesis that electric vehicles are providing a new source of demand, and the demand for electric vehicles will continue to grow, and that nickel is an absolutely necessary part of the whole electric vehicle revolution for the reason that nothing can replace nickel in terms of energy density. So if you want range, you have to have nickel in your battery chemistry. And people do want range, particularly in North America and Europe. So, you know, the best way to make money in the market, and again, I'm not an investment advisor, but I am an investor myself, and I do invest in other things besides my own company. The best way is to find the cheapest possible entry point, build a position, and have a 2, 3, 4 year timeline on it. And that is historically how I have done extremely well as an investor. You have to pick your entry point when everybody hates the sector. That's when you buy. And then you wait until everybody loves the sector, and that's when you sell. So it's that simple.
And you've been in nickel for 20 years now and working with commodities for 30. So you got some experience there.
Yeah, it's patience is key. You can't try and guess about short-term price fluctuations. You just have to look at the long term. You have to look at major moves. And I would suggest that, the prices of nickel right now, according to Jim Lennon at Macquarie, half of global nickel producers at these prices are losing money with every pound of nickel they produce. Half of them. And so, that can last for a little while, but it can't last forever. I just suggest it looks to me, just based on that fact, like nickel is at or very close to its bottom. And it's good to buy things when things are close to the bottom. The other thing about our project is it's very leveraged to nickel prices. Our economics are not great at very low nickel prices, but if you get nickel prices of $9, $10, $11 a pound and higher, and nickel prices have been as high as $40 a pound, the economics just balloon, and the depreciated net present value balloons. It's this, if you've got a really large deposit and you've got, profitability like this, well, if the price moves up, you've got this balloon effect in the profitability. And so it's leverage. And that's another part of the investment thesis for our company is if you want the least risky technical approach to a very large nickel deposit, and you want leverage to the price of nickel, I don't think you can find anything better than this.
All right, well, folks, you heard it right here from Mark Jarvis. Low risk, buy nickel when it's cheap, invest in companies that are looking out for the long term and who are going to be there to supply in an environmentally friendly manner. Great talking with you, Mark. Definitely going to check back in with you again in future.
Thank you very much, Michael. It's been a great conversation. I really enjoyed it.
We've been speaking with Giga Metals Chairman and CEO Mark Jarvis, and you've been watching Global One Media's Stocks to Watch. I'm Michael Suido.